What is Bitcoin? A beginner's guide. Bitcoin is best understood as a form of digital money that exists solely in electronic form. It was introduced in 2008 by an unknown person or group using the pseudonym Satoshi Nakamoto. The core idea behind Bitcoin was to create a decentralized currency that operates without the need for banks or intermediaries. In a world in which traditional financial systems rely on centralized institutions to validate and process transactions, Bitcoin offers an alternative built on cryptography and a distributed ledger known as the blockchain. This innovative approach opened the door to a new era of money, one in which transactions are directly verified by a network of computers rather than by any single controlling entity. At its foundation, Bitcoin is underpinned by a technology called the blockchain. Think of the blockchain as a digital ledger that is maintained by a network of computers, known as nodes, each of which holds an identical copy of the entire transaction history. Every time someone sends or receives Bitcoin, that transaction is bundled into a block, a collection of data that includes details about the sender, recipient, and amount transferred. Each block is then cryptographically linked to the one that came before it, creating a chain of blocks that goes all the way back to the very first transaction. This design is crucial because it ensures that once data has been recorded in the blockchain, it becomes nearly impossible to alter or remove. Any attempt to modify even a single block would require recalculating the cryptographic hashes of all subsequent blocks, a feat that is computationally prohibitive and would require control of a significant portion of the network's computing power. The creation of Bitcoin came at a time when the world was reeling from the global financial crisis of 2008, a period marked by a deep mistrust of banks and financial institutions. This context gave rise to the appeal of a decentralized currency that operated independently of traditional systems. The Bitcoin protocol was designed in such a way that there is a finite supply. Only 21 million Bitcoins will ever exist. This cap on supply mimics scarce resources such as gold and is one of the reasons why Bitcoin is sometimes referred to as digital gold. Because of this limited supply, Bitcoin has attracted interest not only as a medium of exchange but also as an investment asset, with many investors hoping that its scarcity will drive up its price over time. An essential aspect of how Bitcoin operates is its consensus mechanism. The network relies on a process called mining to validate transactions and secure the ledger. Mining involves solving complex mathematical puzzles that link new blocks to the previous ones. Individuals or mining groups, using high-powered computers, compete to solve these puzzles. When a miner successfully finds a solution, the new block is added to the blockchain. In exchange for this work, the miner is rewarded with a certain number of newly created bitcoins as well as any transaction fees contained in that block. Over time, the reward for mining is halved in an event known as halving, a process that reinforces the limited supply and adds to the deflationary nature of Bitcoin. Mining is not only the way new bitcoins come into circulation, but also the method through which the network achieves consensus. Because the process requires a significant amount of computational power and energy, it creates a barrier against potential attackers, ensuring that no single entity can dominate the validation process. Bitcoin transactions are both innovative and transparent. When a transaction is made, it is broadcast to the entire network where nodes independently verify the transaction's authenticity. Verification is done using cryptographic signatures, which ensure that the person spending the Bitcoin is the rightful owner. Every Bitcoin user has a pair of cryptographic keys, a public key that can be seen by anyone and a private key that is kept secret. The public key essentially serves as an address to which funds can be sent, while the private key is used to sign transactions, providing proof that the transaction was indeed authorized by the asset owner. This scheme not only secures the network but also maintains the pseudonymous nature of transactions. Although all transactions are recorded on the public ledger, the identities behind public keys are not inherently tied to a person's real-world identity unless additional information is provided, adding a layer of privacy to the system. One of the remarkable qualities of Bitcoin is its decentralization. Unlike traditional currencies that are issued and regulated by a central authority, Bitcoin is maintained by a distributed network of users all around the world. This decentralization means that there is no single point of failure. In the event that one node or even several nodes malfunction or are taken offline, the remaining nodes continue to carry on the verification and recording of transactions. This robust network design makes Bitcoin resilient to censorship or control by any single government, institution, or corporation. However, this decentralization also means that there is no central authority to turn to if something goes wrong. For example, if you lose your private key, there is no central bank that can restore your coins. The responsibility for security, therefore, falls entirely on the individual user. For many beginners, one of the first questions is how Bitcoin is bought and stored. Bitcoin is typically purchased on specialized online platforms known as cryptocurrency exchanges. These exchanges allow users to trade traditional currencies like the US dollar or the euro for Bitcoin. Once purchased, Bitcoins can be stored in digital wallets, which come in several forms. A digital wallet might be an application on your computer or smartphone, a hardware device designed specifically for secure storage, or even a piece of paper printed with your keys, a method known as a paper wallet. The choice of wallet depends on the level of security required and the frequency with which you plan to use your Bitcoins. For everyday transactions, many users prefer the convenience of software wallets, while those who are primarily holding Bitcoin as a long-term investment may choose hardware wallets for their enhanced security. Another interesting aspect of Bitcoin is how it has redefined our understanding of money and financial transactions. Traditionally, money has been issued by governments and managed by banks, but Bitcoin removes the need for these intermediaries. In the Bitcoin network, every participant is both a user and a validator of transactions, and the rules of the network are enforced by code rather than by any central authority. This open-source, trustless system means that transactions can be made with lower fees and with greater accessibility across borders. For many people around the world, Bitcoin presents a way to participate in the global economy without needing access to traditional banking services. This is particularly significant in regions where the banking infrastructure is weak or where citizens are subject to heavy financial regulation. The value of Bitcoin is determined by a combination of factors, including scarcity, demand, and speculation. Because the total supply of Bitcoin is capped, its value is influenced by the balance between the demand for Bitcoins and the rate at which they are produced. This economic dynamic is similar to other scarce resources, where increasing demand and fixed supply can lead to higher prices. Over the years, Bitcoin's price has seen dramatic fluctuations, attracting both enthusiastic investors and cautious critics. The volatility of Bitcoin can be attributed to various factors such as regulatory developments, changes in market sentiment, and broader economic events. Investors are drawn to Bitcoin's potential for high returns, but this same volatility also means that there are significant risks involved. Security is a topic of paramount importance when discussing Bitcoin. The cryptographic principles that underpin the Bitcoin network are designed to ensure that transactions remain secure and that the integrity of the ledger is maintained. Each transaction is verified and recorded on the blockchain in a way that makes it nearly impossible to reverse or tamper with once confirmed. However, while the Bitcoin protocol itself has proven to be highly secure, there are still risks associated with using and storing Bitcoin. Security breaches often occur not at the protocol level, but at points of vulnerability such as cryptocurrency exchanges or individual wallets. There have been instances where exchanges have been hacked, resulting in the loss of significant amounts of Bitcoin. As a result, users are advised to take personal security measures very seriously, such as using robust passwords, two-factor authentication, and, where possible, keeping their funds in wallets that are not connected to the internet. An important concept for anyone new to Bitcoin is understanding how trust is established in a system that operates without central oversight. In traditional financial systems, trust is placed in banks and government institutions, which have the resources and authority to ensure that transactions are processed correctly. In the Bitcoin network, trust is instead established through a consensus mechanism and cryptographic proofs produced by miners. This trust is not based on the reputation of a central authority but on the mathematical security of the blockchain itself. Because every participant in the network can independently verify transactions, there is no need to blindly trust one institution to manage everyone's funds. This creates a transparent and democratic system where rules are hard-coded and universally applied, and every transaction is open to scrutiny on the public ledger. Bitcoin has also sparked a significant cultural and ideological movement. Often heralded as a symbol of economic freedom and a challenge to the established financial order, Bitcoin appeals to those who believe in the decentralization of power. The idea that money should be free from government manipulation and accessible to all people, regardless of where they live, is one of the driving forces behind the Bitcoin community. This community is incredibly diverse, including technologists, libertarians, investors, and everyday people seeking an alternative to traditional financial systems. This ideological aspect has helped Bitcoin gain a loyal following and has spurred innovation across various fields, including finance, technology, and even social activism. As Bitcoin has matured, its ecosystem has grown increasingly complex. Beyond simple transactions, Bitcoin now serves as the foundation for a wide array of financial services and products collectively referred to as the cryptocurrency ecosystem. For example, there are now platforms that allow for lending and borrowing in Bitcoin, services that enable users to make payments in physical stores, and even financial instruments that let investors hedge against the volatility of Bitcoin through derivatives. This expanding ecosystem has contributed to Bitcoin's growing embrace as both a transactional currency and a store of value. Additionally, the development of secondary layers such as the Lightning Network aims to improve Bitcoin scalability by enabling faster and cheaper transactions off the main blockchain. These innovations seek to address some of the limitations of Bitcoin's original design while preserving its core principles of decentralization and security. One of the appealing aspects of Bitcoin is the idea of financial inclusion it promotes. In many parts of the world, particularly in developing regions, traditional banking services are either inaccessible or prohibitively expensive. Bitcoin provides an alternative that allows individuals to transfer money across borders without the need for intermediaries that charge high fees. This capability opens up new possibilities for people who have been historically excluded from the global financial system. Moreover, the rise of mobile technology has made it easier for individuals to access Bitcoin and other cryptocurrencies, further reinforcing the notion that digital currencies can be a powerful tool for achieving greater economic freedom and empowerment. Despite its many advantages and innovative aspects, Bitcoin is not without its challenges. The price volatility that many users cite as both an investment opportunity and a risk can be unsettling for those used to the relative stability of traditional currencies. In addition, the decentralized nature of the network, while a strength in terms of security and resilience, also comes with a lack of formal customer support. If you lose access to your wallet or fall victim to fraud, there is no central authority you can turn to for help. Furthermore, regulatory uncertainty continues to be a challenge, as governments around the world grapple with how to classify and manage cryptocurrencies within existing legal frameworks. These challenges, while significant, are also driving intense research and development within the community as stakeholders work to address these issues through technological innovation, improved security measures, and clearer regulatory guidelines. For those who are intrigued by Bitcoin but are wary of its complexities, it is important to remember that at its heart, Bitcoin represents a radical reimagining of what money can be in the digital age. By removing the need for central control and leveraging the power of cryptographic proof, Bitcoin challenges long-held ideas about trust, value, and authority in financial transactions. Its decentralized design empowers individuals to take control over their own finances in a way that was once impossible. Rather than relying on a handful of institutions to manage the entire financial system, Bitcoin distributes that responsibility across a global network, democratizing access to financial services and paving the way for a more inclusive economic future. The journey of Bitcoin, from its mysterious inception to its current status as a major force in global finance, is marked by both technological innovation and profound philosophical implications. It invites us to question the nature of money, the role of government, and the structure of our financial institutions. Whether you view Bitcoin as an investment, a technological marvel, or a movement towards financial liberation, it is difficult to ignore its impact on shaping modern discussions about digital currencies and decentralized systems. As more people around the world begin to adopt and rely on Bitcoin, the conversation about what it means to have a secure, transparent, and accessible financial system continues to evolve. In conclusion, Bitcoin is more than just a digital currency. It is an evolving ecosystem built on trustless technology that redefines how we think about money and financial transactions. By harnessing the power of the blockchain, Bitcoin offers a new model for securing and verifying transactions, one that is open, decentralized, and resistant to tampering. While it introduces complexities and challenges that may seem daunting at first, the principles it embodies have the potential to transform the global financial landscape. For beginners, understanding Bitcoin means appreciating its underlying technology, recognizing its potential for financial inclusion, and acknowledging both its innovative contributions and the challenges it faces. As Bitcoin continues to mature over time, it remains a compelling subject of study, investment, and global economic debate, a true reflection of the digital age's promise and its disruptive capacity. This comprehensive guide is meant to demystify Bitcoin for those who are just starting to explore the world of digital currencies. By delving into its origins, technological basis, and the broader ecosystem it supports, we hope this explanation provides you with a solid foundation for further learning. Whether you choose to invest in Bitcoin, use it for transactions, or simply follow its evolution as a groundbreaking technology, Understanding the basics is the first step toward engaging with one of the most influential innovations of our time.